Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within corporate America. And today it looks like Brand Engagement Network Inc. is serving up a new batch of drama with some leadership shakeups and a peek behind the curtain. So what's the big news from Brand Engagement Network Inc., or BNAI as they're known in the trading world? This filing is basically a heads up that some important changes are happening within the company, especially with their top leadership. We're talking about who's in charge now and who just left. It's always a big deal when a CEO role changes, especially when it's an interim situation. Now, before we dive into the people changes, let's quickly touch on what BNAI actually does. They're involved in brand engagement, and their stock is traded on the NASDAQ under the ticker BNAI. They also have these things called redeemable warrants, which basically give people the right to buy their stock at a certain price in the future. In this case, it's $11.50 per share. It's a common structure for companies, especially smaller ones, to raise capital and offer incentives. The main event here is a leadership change. Tyler J. Luck, who was the co-founder and chief product officer, has been appointed as the acting chief executive officer. Think of him as the temporary captain steering the ship while they look for a permanent CEO. He's also staying on as a board member. Mr. Luck's own words really frame this as a continuation of their current focus. He seems ready to keep pushing forward. He also made a point to thank Janine for her leadership, which is a nice touch and shows a smooth transition, at least from his perspective. Let's get a little more background on Tyler Luck. He's not new to the company, he's a co-founder and has been instrumental in developing their AI platform. This is their core technology, handling things like chat, voice, and avatars. He also oversees their engineering and research and development, particularly in South Korea. So he's deeply involved in the product, which is critical for an AI company. Now, onto his compensation. He has an existing employment agreement that provides for a 3-year term. His base salary is $180,000. He's also eligible for a discretionary bonus, meaning the board decides if and how much he gets. Plus, he gets standard benefits, and importantly, he's set to receive awards of 100,000 shares of common stock each year for 3 years. This aligns his interests with the company's success, which is a good sign. The filing specifically states there are no major changes to his employment terms due to this interim CEO role, which is also good to know. Here's where things get a bit more complex, and it's important for understanding potential conflicts or relationships. Tyler Luck is married to Michael Lucas. Michael Lucas is considered a promoter for the company, which is a pretty specific legal term. This also ties into ownership structures. A company called October 3rd Holdings, LLC, is co-owned by Tyler Luck and Michael Lucas, and it holds a significant stake in another entity, Genuine Lifetime LLC. Tyler Luck used to be the managing member of Genuine Lifetime LLC. Tyler Luck used to be the managing member of Genuine Lifetime LLC. Tyler Luck used to be the managing member of Genuine Lifetime LLC. There's a history involving a company called AFG, Genuine Lifetime LLC, which has those ownership ties to Luck, and Lucas issued a substantial amount of stock to AFG. There was also a loan involved, the GL loan of $4 million, where AFG provided the funds. Tyler Luck personally guaranteed this loan, meaning he put his own assets on the line if Genuine Lifetime LLC couldn't repay. He also agreed not to sell his own shares or have October 3rd Holdings sell its shares until the loan was repaid, with some exceptions. This shows a significant financial commitment he made tied to the company's past operations. More recently, in June of last year, there was a debt conversion. The company issued about 93,000 shares of its common stock to October 3rd Holdings LLC. This was in exchange for converting about $400,000 of debt from a company subsidiary to October 3rd Holdings. So essentially, some debt was turned into stock ownership for a company that Tyler Luck and Michael Lucas equally co-own. Now let's get to the other side of the leadership changes. Janine Grasso has concluded her service as interim chief executive officer and has resigned from the board of directors effective immediately. The company expresses thanks for her contributions during a transition period. This filing date of September 12th is key here, as that's when her service ended. There's also news about Christopher Gartner. He resigned from the board of directors on September 8th. At the time of his resignation, he was only serving as a board member. Interestingly, Mr. Gartner sent an email on his resignation date, which is included as an exhibit to this report. The company's response is notable. They believe his correspondence contains significant inaccuracies and mischaracterizations. They pretty much disagree with his account of events and state that their governance and operations are proper and compliant. This hints at some possible internal disagreements or a difference in perspective on how things were handled. In a separate but somewhat related note, the company is still working on its quarterly report for the period ending June 30th of this year. They're saying they'll file it as soon as they can, and they emphasize their commitment to being transparent and timely. This could suggest that the recent events might have caused some delays or that the company is under scrutiny. And finally, looking at the exhibits, we see that a key document here is Exhibit 17.1, which is the email from Christopher Gartner to the board. That's likely where some of the inaccuracies and mischaracterizations the company is referring to might be detailed. So what's our take on all this? Brand Engagement Network Inc. is going through a significant leadership transition with Tyler Luck stepping in as interim CEO. He's clearly deeply invested in the company's product and has a notable personal financial history tied to its past operations, including a personal guarantee on a loan. His appointment suggests a belief in his ability to navigate the company through this period. However, the quick departure of another board member, Christopher Gartner, and the company's strong disagreement with his account of events does raise a flag. It hints at potential internal friction or differing views on company operations that could be a risk. Companies that are generally transparent and have smooth operations often don't have these kinds of pointed public disagreements with departing board members. The fact that they're still working on a past quarterly report could also indicate operational challenges or perhaps a focus shifting due to these leadership changes. While Mr. Luck's background in product and AI is a strength, leading a company as CEO requires a different skill set, and the interim nature of his role means the search for a permanent leader is ongoing. This period of transition always carries some uncertainty. In conclusion, BNAI is in a phase of change. The focus on their AI platform remains clear with Mr. Luck at the helm, but the recent board departure and the company's sharp rebuttal suggests there might be more to the story than meets the eye. Investors and observers will be watching closely to see how this interim leadership plays out and if the company can achieve smoother operations and more timely reporting moving forward. Alright, that's our breakdown of Brand Engagement Network Inc.'s latest filing. What's your take on these leadership changes and the hints of disagreement? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community in the description to keep the conversation going. Thanks for watching. See you next time.